Hello people, how are you all doing? Before your CA Foundation examination, when I uploaded marathon revision for paper 1 principles and practice of accounting, I had mentioned it to you that after exam I'll come about with detailed solutions to your entire paper 1 principles and practice of accounting. For the fact that I was little occupied with my schedule, I couldn't come out with solutions. Though I prepared the solutions a little while ago, I couldn't record videos. So today also I had a little longer day, but here I am to keep up my promise, discussing solutions in detail for CA Foundation, Principles and Practice of Accounting, May 2022 examination, which actually happened in the month of June 2022. So I'm going to split this video into three parts, part 1, part 2, part 3. I don't want you to see a really long video in the channel like, oh god, who's going to spend so much time watching so many answers? No. So I'm going to break it into three parts. First part will discuss question number 1 and 2. Second part 3 and 4, and last part will discuss question number 5 and 6. Great. So the code for the paper is QEM, and this seal and signature what you see, you wouldn't have seen this in your question paper that you received there. This is put later and then uploaded into your website of ICA. So I've downloaded this from ICA and then I've unlocked it so that I can draw some lines. Usually when you download it from the ICA website, you will not be able to draw lines. So I downloaded it before and then unlocked because I can underline and highlight things to show it to you. Otherwise I could have downloaded it right now in front of you on the ICA website. But before I go ahead with the solution discussion, I have to inform you people about the new batch that's starting on the Unacademy platform for CA Foundation examinations that's happening in November 2022. It is Step Up with Yash's batch for CA Foundation comprehensive English batch, 100% in English and 100% syllabus coverage. And the schedule for the batch is also available till August, September. Yeah, the batch is expected to get over in October or early part of November. And now it's also official that your examination of foundation will not be in November but in December. So I hope your preparations are going in full swing so far. Those who have not written in May and writing in November, and those of you who written exam in the month of June, you can recommend your juniors to join this batch. And you know the advantages of plus subscription. You get live interactive classes, recorded backup of the same available to you, and doubt solving sessions at regular intervals, periodic tests, and with one subscription you get multiple educators notes ka access and then classes ka access. But with Iconic you get added advantages like printed material available at your doorstep, one-to-one live mentoring program, evaluated test series, and quite a lot more. So what are you waiting for? Take up an academy subscription and use the code YESHAS, which is YESHAS, to get 10% off on the price that you usually see on the screen. And there is an offer, this was there till 15th of July. However, this offer is not there anymore. Yeah, you get 15% off on the prices that you see on your screen. So what are you waiting for? Take up an academy subscription and join us in this beautiful journey of CA Foundation. We promise you to take you to CA intermediate and then like from there to final and then beyond. Fantastic. So, chalo, let's get started. Usual pattern, nothing unfamiliar or nothing new when it came to the question paper pattern. Question number one, compulsory. Out of the remaining 5 questions, 4 were supposed to be answered. Internal choice also existed in one of the questions. I think third one, there was an internal choice. And 20 marks each. First question may 6 true or false questions, followed by some more from chapter 1. And that's it, the usual pattern. Nothing very unusual about the question. Nothing like I wouldn't make any comment saying that paper was easy, paper was difficult, paper was lengthy. No, it was very much on par with the usual examination standards. Nothing very offbeat, nothing very surprising. Yeah, one with decent amount of preparation should have been able to crack the paper very easily. Sorry, I told that very easily. I'll take it back. I take my words back. It was a nice paper. Yeah, 60 GSM if I'm not wrong. Quality of the paper. That's the answer that we used to give. Whenever people used to ask us, how was the question paper after the exam, we used to say, nice, quality was good. Looks like 60 GSM paper. It was not A4 size, between A4 and king size. So good quality. Ink was also nice. So that's the answer that we used to give back then. Fine. Let's start. Question number 1A. State with reasons whether the following statements are true or false. With reason, we will definitely do that. Number 1, A claims that a claim that an enterprise is pursuing through legal process, whereas the outcome is uncertain. See, first one, it is legal process. What is the outcome is uncertain. Is a contingent liability. Is the answer true? The answer, like, you won't get marks just for it in true or false. You would have to write the reason as well. So the answer is actually true. The answer is actually true. So what is the reason? We'll just write the definition of contingent liability at first. You know, right? Contingent liability is a present obligation arising from past event. No, sorry. Contingent liability is a possible obligation arising from past events whose existence is confirmed on occurrence or non-occurrence of one or more future events. We had discussed this. You remember? Liability is a present obligation. Contingent liability is a possible obligation, yeah, which existence is confirmed, happening or non-happening, future uncertain, uncontrollable. Remember me giving the example of girlfriend turning into wife, boyfriend turning into husband, happening or non-happening of an event, wedding, future uncertain, uncontrollable. We had discussed this in the marathon revision also. I hope you people are aware. So the same thing is what you'll write. Contingent liability is a possible obligation arising from past event whose existence is dependent on occurrence or non-occurrence of one or more future events, and in this case it is a court case pursuing legal process, so it will take time and it will turn out into an obligation in the future, not right now. And it becoming an obligation is dependent upon happening or non-happening of one or more future events. So this, my friends, is a contingent liability. Accounting standard 29. I hope you're all aware. I just checked if everything's going fantastic and fine. So that's the answer for the first one. Let's now quickly see the second one. At the end of the accounting year, all the nominal accounts of the ledger book are balanced. We discussed this in the chapter of ledger accounting process, unit 2. When I was talking about ledgers, I did mention it to you very clearly. At the end of the period, real and personal accounts are closed, or sorry, balanced. We'll write balance carried on and balance brought in subsequent period. However, nominal accounts are closed by transferring such amount to trading or PL. Let me repeat. At the end of the accounting period, real and personal accounts are balanced. Meaning, if it is an asset account, cash account, if it is bank account, if it is any debtor account, creditor account, all of these accounts you would see balance carried on, balance brought on, 2 or by, depends. But we write that. But in accounts like purchase, sale, interest, rent, all of these, you cannot write balance carried on, balance brought on. Should always close them by transfer to P&L, profit and loss account, or trading account in certain cases. So that's what is a statement about. So it's saying at the end of their nominal accounts are balanced. Is it true? No, no, no. Real and personal accounts are balanced. Nominal accounts are closed. You get that? So the answer is false. But what's more important is the reason. Have a look. Answer is false. So what do we do? At the end of the accounting period, nominal accounts are closed. Nominal accounts are closed by transferring to profit and loss account. On the other hand, real and personal account balances are carried forward to the subsequent period. Let me repeat. Real and personal accounts are carried forward to the subsequent period or the next period. You guys get that? That's with the second one. Let's now see third one. Where is my mouse cursor? I'm not able to see. Oh, got it. The specific due date excludes the addition of grace days to arrive at the due date. This is from the chapter 6, unit 1, bills of exchange. So bills of exchange mein we discussed, whenever on the bill of exchange, if the date is already mentioned, meaning I classified the bills into two categories: bills with specific date, bills with specific period. Yeah, this was there. You can go back and then watch our marathon revision also. I can put a snippet if you want. So we had very clearly mentioned in the class that whenever it is a bill with specific period, 3 grace days will be added. Maturity date and due date as difference. However, if it is a bill with specific date mentioned, that date is due date, that date is maturity date. That date itself is a due date and maturity date. There is no concept of 3 grace days. So the concept of 3 grace days comes only and only if such a bill is bill with a specific period. In the bill, now I assume that I raise a bill. On the bill, I've written 14th of August, the date on which you should pay me money. I've ordered, you signed, and I have it with me. You have to pay me on 14th of August. There is no concept of 15, 16, 17 grace days. I will pay on 17th. No way. Chance illa. You have to pay me on 14th. That's it. That's what they're saying. The specific due date excludes the addition of grace days. The answer is true. The answer is true. Have a look. True. Bill with specific date would not have 3 grace days for maturity from due date. Due date is equal to maturity date. So when will there be gap of 3 days? The gap of 3 days will arise when it is a bill with specific period. In the bill, instead of writing the Date of maturity, I'll write bill for 90 days. I unconditionally order you to pay me the money after 90 days, after 20 days, after 15 days. If I say that way, then to the bill date, we add that bill period and also add 3 grace days to arrive at maturity date. I hope you all understood. At any point of time on any of the questions that I'm discussing right now, if you have any doubt, you can ping me. You can drop in the same as a message to as a comment to this particular video, or you can text me on the Unacademy app, or you can drop in a message in the official Telegram channel or wherever you find me. Just drop in a message and I'll definitely reply to your query. Got it, guys? Fantastic. And same holds good for any other topic that you want me to cover. If you want me to cover any other topic in your syllabus, please do text me. I'll definitely come about a video on that topic. Great, guys. So we'll do fourth one. Any amount spent on replacement of worn out part of a machine is capital expenditure. Some parts of the machine got worn out. If you say, I usually what to say, talk about it in Kannada, like saudogide. Yeah, wear and tear, because of more usage. No, it's got like rubbed off. Now it will rubbed off and then worn and torn. It can happen again. Now, for example, for a bike, whenever you give for service, you get that brake shoes changed. Now that brake shoes will go away every 3 months, 4 months. In the traffic, when you put that brake and then remove the brake, put the brake, remove the brake, put the brake, remove the brake, or clutch plate, all of these things will go because of excessive usage. And it's not like I change the brake shoe and the value of my bike has increased. Wow, sir. No, the value of the bike remains the same. In a single year, we get the brake shoes changed 2 times. Sometimes if you're using too much, you can get it changed 3 times, 4 times also. So such an expenditure incurred to change the brake shoes or any of such minor parts of the asset will not increase the value of the asset. That is revenue payment only. That is not going to be capital payment. That's what is the point. Here they are saying no, 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 no. It is capital payment. Is it capital payment? The answer is no. It is not capital payment. If someone calls it capital payment, we'll say you are wrong. It is false, and we won't stop there. We have to prove them wrong by giving them a reason. Same in case of this also. So we need to write the answer as false and also write the reason. Shall we see it? Chalo, fourth one. The answer is false. Amount spent for replacement of worn out part of machinery is revenue expenditure. Why is it not capital? Because it is revenue, sir. Hey, why is it revenue? Considering it to be recurring. Usually we repair it again and again. And immaterial. Now I have a bike of 3 lakh rupees. My brake shoe cost me 400, 300. With the service charge for implementation, it's 300, 400 rupees only. You get that? So 3 lakh rupees bike, 400, 500 rupees brake shoe. So it is immaterial, it is recurring, and the purpose is not to serve for a long time. Like I buy the bike, I change the brake shoes. My son, my grandson also will use the same brake shoes. No, 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 that is not going to happen. So nature of the item is not long term. The purpose is not long term purpose, and the expenditure is recurring in nature, and the money spent is also immaterial. And that is the reason, my friends, we call it what? Revenue expenditure. Great. Let's go to fifth one. Debenture suspense account appears on the liability side of balance sheet of a company. Now, what is this debenture suspense account? This comes in the last chapter, company accounts chapter. Mein debentures are issued. Initially, you do all this normal debenture issue entries, debenture application, debenture allotment, all of this. Towards the end of the chapter, you have something called as debentures issued as collateral security. What is this collateral security? In this case, company wants to take loan. But when the company takes loan, it has to give some asset as pledge. There is no asset to give pledge. So what do? Okay, fine. If they don't give assets as pledge, will somebody give money? They might not be willing to. They will ask for debentures. But if you have to issue debentures, then it's a long process. You need to take approval from a lot of people. So what do? You take loan from them. They will give you money. As a guarantee, you give them debentures. And this is suspense. Shh, don't tell anyone that I have given you debentures. You say this way and give them debentures. If in case you pay them the money that you're supposed to pay, loan will be cancelled, debentures will be cancelled. If in case the money that you taken from them by way of loan, you don't repay, they will say, boss, I will encash it by way of debentures. I will say that loan is no more a loan, that loan is debenture. Sir, how would the accounting be done for this? Very simple. Whenever the loan is taken, money is coming in, I will write cash or bank account debit to bank loan account. Cash or bank account debit to loan account. Loan account credit because liability increasing. On the continuation part, I have taken loan, so asset debit, liability credit. Now I give them debentures. So I'll credit debentures account, X% debentures. But I cannot write cash account debit because I'm not receiving money by way of debentures. So in the debit I'll write debenture suspense account. Let me tell you, whenever debentures are issued as collateral security, we pass two entries. Entry number one, bank account or cash account debit to loan account. Entry number two, we'll write it as debenture suspense account debit to debenture. If we repay the loan, whatever entry we written bank to loan will get reversed. Loan account debit to bank. And those debentures also will get reversed. X% debentures account debit to debenture suspense. Suspense is also closed. Debentures are also closed. That's how it works. However, if in case I fail to repay loan, then it'll say loan cancel, debenture suspense cancel. Money given is for debentures. So you will debit bank, you debit loan account, you'll credit debenture suspense account. So till this time this entry happens, such debenture suspense will not be a liability. It is debit in the entry if you remember what I told now. So this has to be treated on the asset side of the balance sheet, or it will be deducted from the liability side debentures. Got that? So the answer is wrong, false. Whenever debentures are issued as collateral security, debenture suspense account will be opened and it will be written on the asset side of the balance sheet. Or you can deduct it from debentures on the liability side. Liability side will write debentures, from that only you would have to deduct. Got it? Fantastic. This is the fifth sub question, and now let's see the sixth sub question. If errors are detected before preparing trial balance, this is our stage one. Before preparation of trial balance only we have identified the errors. Then all the errors are rectified through suspense account. What are we doing? All the errors are rectified through suspense account. Is it true? The answer is no, it's false. Why? It's pretty simple, guys. Suspense account comes into picture because trial balance doesn't tally. In this question they've told, after preparing trial balance. After preparing trial balance. So trial suspense account will come when the trial balance doesn't tally. So when you prepare trial balance, if it is a error of principal, if it is an error of complete omission, then, or if it is an error of compensation, trial balance will tally, because those are not the errors which will affect trial balance. However, if it is one-sided errors, error of partial omission or error of commission on one side, then the trial balance won't tally. Then we'll open suspense account and close out trial balance. So trial balance will not tally only and only if there is one-sided error. So when we do rectification at stage 2, that is after preparing trial balance, rectification entry will have suspense account only and only if it is one-sided error. Rectification entry will have suspense account only and only if it is one-sided error. If such an error is a two-sided error, then the rectification entry will not have suspense account. You get that? So rectification entry after preparation of trial balance will constitute suspense account only if it is one-sided error. Two-sided errors identified after trial balance will not have suspense account in them. So that's the answer. Look at the sixth one. Only one-sided errors identified after trial balance are rectified through suspense account. Got it, guys? So that's the answer to question number 1 is 6. Great. Let's now go to question 1b. So 1a done. Let's now do question number 1b. Ready? 1b. What do we have in 1b? Briefly explain the following concepts of accounting. So this is our favorite part. First one, money measurement concept. Do you know money measurement concept? Did this happen to you in the exam? I told in the class, no? Your friend asks, you do this. In between someone asks, Rajavardhan sir, student. Yeah, same thing. What is money measurement? Transactions to be recorded in books of accounts should be measured in terms of money. What is it? Transactions to be recorded in books of accounts should be measured in terms of money. Why money? Because it is of standard economic value, universally accepted, and the common unit of measurement. Got that? That's the answer for money measurement. And what is the answer for periodicity concept? Remember? Exactly. Maybe you could have used this, you could have done this in the exam hall also. Okay, question number 1b2, periodicity. Yeah, if you do that entire line to line, word to word, you get it. What is periodicity? Entire life of the business is divided into fractions called as accounting period, and financial statements are prepared for each of the accounting period. That is periodicity concept. It's also called as accounting period concept. However, let's see the answer. Ouch. Number one, money measurement. Transactions are to be recorded in the books of accounts and should be measured in terms of money, as money is the medium of exchange and standard of economic value. Got it? Periodicity, what does it say? Life of a business is divided into small fractions of time called as accounting period, and financial statements are prepared for each accounting period. Next part is, what does it facilitate? It facilitates uniformity, consistency, and matching periodic revenues with expenses. If you remember, when we discussed, I told it facilitates uniformity, but I didn't tell you consistency and matching. I told we'll discuss that later, and later after we did matching, we underlined in that matching current year expenses with current year income, current year we wrote periodicity, expense income we wrote accrual. Forgot, huh? If you remember that, please do drop in a comment to this video and then tell I do remember that from our marathon or from our regular batch or wherever you remember. That gives me a little bit of feel good factor to do more. Yeah, I'm planning quite a lot of things for the upcoming days for you people on an academy's YouTube channel and like a lot of other places. I'll do a lot of free content and a lot of exciting plans, starting with an assessment paper like accounts progress tracker. It will help you take unit wise tests and then track how much is the syllabus. Trying it on a trial version. You guys might have already come across about the same. Huh? So conducting more quizzes, tricky quizzes, and trying to make one last minute revision material to be shared to all of you people, which you can use the day before the examination to study, and lot more, not just for foundation but for inter also, for all of you clearing this examination and then coming down to meet me in inter. Yeah. Great guys, so we're done with 1A 1B. That calls for end of 20 marks so soon, sir. Yeah, 6 2s are 12 plus 4, no, 16 done. One more left, one more kutti question, trial balance question. We've done a lot of questions like this in class, so there's one more of that sort. Yeah, let's read the question. One of your clients, oh god, you already have a client, you written CA foundation exam awaiting results, already clients. Oh, CA saab. One of your clients of Mr. Okay, one of your clients, Mr. X, the name of the client is Mr. X, asked you to finalize his account for the year ended 31st March 2022. वो सब साइड में रखिए, कितना फीस पे करोगे, ask him how much fees first before you start the work. Over here you won't get fees, you only get marks. How many marks? 4 marks. It's okay, now we'll do it for marks, later we'll do it for money. Okay, as a basis for audit, Mr. X furnished you the following information. Okay, they've given some data. Let's see if something's wrong. Capital, credit, correct, no problem. Drawings, debit, no problem. Leasehold premises is an asset, debit, no problem. Sales, it's given on the credit, no problem, correct, no? Due from customer, if the customer is supposed to pay us money, don't you think it's an asset? Asset has to be written on the debit side. They've wrongly written on the credit. So that 1590 should actually come here. That 1590 should not be appearing on credit. We should post it to debit side. Purchases debit, perfect, no problem, all good. If purchases is on debit, purchase written, will it be debit? Nonsense. Hey, don't be saying nonsense, okay? It's a good thing that the client is doing mistake. You get to correct. If client can do it right, what will you do? Just imagine if a patient can operate himself, like this small heart problem. The patient will be like, give me one plate. Oh, small hole. Give me that sui daga. Sui daga. And if the patient stitches it himself, then what will doctors do? If people can build their houses, what will engineer do? If people can maintain their accounts themselves and then do everything, what will CA do? No, no. It's good that they do mistakes. 792. Purchase return should actually come on the credit, but it's wrongly appearing on the debit. And loan from bank, you've taken money from the bank, very good. So that's appear on the credit, fantastic, no problem. Loan from the bank is a liability. Trade expense, debit balance, very good, correct, nothing wrong. Trade payables, it's a payable is a liability to appear on which side, guys? To appear on the credit side. By mistake they've given on the debit. Let's move it, because I like to move it. I like to move it. When they get it wrong, we like to move it. So 1584 should appear on the credit. Bills payable is again a liability, my friend. It should also move to credit side. Let's move it. Then we have salaries and wages. Salaries and wages is expense, and expenses to always appear on the debit. Correct again, nothing wrong. Cash at bank is also an asset, debit side, nothing wrong. Opening inventory is an asset, it should appear on the debit. By mistake, they've given on the credit. Let's move it. This 792 to appear on the debit side. 792 and 1389 is an expense, and this expense will appear on the credit. Nothing wrong. All good. Sorry, debit. All right. Correct again. Sales will be appearing on the credit. Sales return should actually appear on the debit. Sales return should to appear which side? Debit side. So I'll move sales return to debit side. Oh, wrong color. More darker shade of red. 294 rupees debit sales return. Perfect. By this our trial balance will tally. In spite of one, two, how many? 1, 2, 3, 4, 5, 6 errors, no? Their trial balance is still tallying, but at a wrong amount though, so don't worry. So this is the correction that we should do. Then they've given closing inventory was 1722. Closing inventory, what do we do? Closing inventory should not appear in trial balance. It should appear outside the trial balance. It's an adjustment item. Sir, can closing stock never appear in trial balance? Hey, I didn't tell that. Okay, you can include closing stock in trial balance, but if you accommodate closing stock in trial balance, then you would have to change your opening stock and purchases. You should remove opening stock, you should remove purchases, you should remove credit part of closing stock and then call it adjusted purchase or COGS. And closing stock will appear only debit side of the trial balance. Do you get this? So that is the impact. We've done questions on that. I hope you remember. And this is how you treat your closing inventory. Got it? Mr. X claims that he has recorded every transaction correctly. Oh, you should only tell that you've done correctly with so many mistakes. You've done everything correctly except for 6 mistakes. As a trial balance is tallied. Oh, because it's tallied. See, trial balance tallying doesn't mean it's completely correct. It can only assure you mathematical accuracy. Check the accuracy of above trial balance, give reasons for the errors. That's it. We need to write reasons. What is it? I told you, no. Due from customers is an asset. It has to be written on the debit, wrongly written on the credit. Now change. Purchase return as credit balance. So it has to be written on the credit because it represents outflow of goods. Trade payable is a liability. So it has to be on the credit. And then bills payable is a liability. So it should be credit balance. Opening inventory is an asset. So debit balance. Sales return is outflow of goods. Sales return is inflow of goods. So it should be written on the debit. So that's it. Same thing I've prepared also for you guys. See, have a look. Due from customers, purchase return, trade payable, opening inventory, and sales return. So these are the items with errors. So I've written the same trial balance, whatever is there here, into the Excel sheet, and I've just put the items which are wrong and now corrected in red color. I hope you guys will be able to crack the logic based on this. Yeah. And closing stock should be written in not in trial balance but after trial balance. So that's with regard to question number 1, guys. I'm glad that you people would have understood by now. I hope that you people would have understood by now. And now I'll move on to question number 2. At the end of question number 2, we'll say tata bye bye to this video. See you all tomorrow at the same time with part 2, that is solution to question number 3 and 4. And in the last one, we'll see question number 5 and 6. Okay, guys. So there we go. Question number 2A coming up. Machinery account of a factory showed a balance of rupees 95 lakhs on 1st of April 2020. Okay. The books of accounts of the factory are closed on 31st of March every year. Very good. And depreciation is written off at 10% per annum. Under the diminishing balance method. On 1st of September 2020, a new machine was acquired at a cost of 14 lakh and 44,600 was incurred on the same day as installation. So the cost of that new machine will become 14 lakh 44,600. You get that? One moment. Okay. Yeah, when I'm recording this, I have a flight to catch in another 3 hours. 3 hours now. I have to start in another 3 hours and I have a flight to catch in 5 hours now. So I got a message. I was just checking if it is something important. No, same thing. All good. Okay, where were we? 14 lakh 44,600 will be the cost of the new machinery. And that's it. On 1st of September 2020, a machine which had a cost of 21 lakh 87,000 on 1st of April 2018. Oh, see, though we are supposed to do accounting for 21, now I need to compute the value of this asset from 1st of April 2018 to 2021, because if not, I will not be able to understand what is the value. Okay, 2 3 years ago its value was 21 lakh 87,000. It is right now sold for 3 lakh 75. So I should depreciate it for all those 2 3 years to identify the book value for the current period, and then compare it to the selling price of 3 lakh 75,000 to identify profit or loss arising on sale of this asset. Another machine which had a cost of 21 lakh 85,000 on 1st of April 2019 was scrapped. Okay, so now I know one machine whose cost is 21 lakh 87 on 1st of April 18. Another machine whose cost was 21 lakh 85 on 1st of April 2019. So I would have to do computation from 1st of April 18, continue it to 1st of April 19, new machine introduction or machine which was there, but I know from that date, and bring it down to 20 and 21, because 2021 mein one machine is scrapped, one machine is sold. So what is the difference? Scrapped means it is sold at a point where it is no longer capable of being used for purpose it was intended. Meaning this machine, when you scrap it, it won't realize much value to you. In fact, certain days it will realize 0 rupees. Anda, shunya, motte. Get that? And that's it. Here they have not given anything. They've given, it realized nothing. Nothing. Okay. Prepare plant and machinery account for year ended 31st of March 2021. So in this question, they're asking us to prepare plant and machinery account for 2021. But our working note starts from 2018. At the allow the same rate of depreciation as in past and calculate depreciation to the nearest multiple of a rupee. Round it off is what they're saying. So I've done the computation already. So this is my machinery account. But before you go to machinery account, let's go to working note. So I'm doing the computation from 2018. Observe carefully. It's a very nice one. So we'll start from 2018. So there is machinery number one old machinery, and machinery number two. Machinery number two is purchased in 2021. Machinery number one, what was held from us from long time, has three parts. One part which is sold during 2021, one part which is scrapped during 2021, remaining is retained. Yeah, whatever asset which is scrapped, oh no, sold, the cost of that in 1/4/2018 is 21 lakh 87,000. Long ago. So we'll depreciate it to present date. 2018-19's depreciation of 10%, 2,18,700. After depreciating which, we will arrive at 19,68,300. We'll again depreciate for 1920. Okay, this is 31st of March 2020. Yeah, we depreciate for that year. Again, I'll depreciate by 10%, 1,96,830. I'll be left with 17,71,470. You get that? So this asset is sold on 1st of September 2011. If I sell it on 1st of September 2011, no, in the present year 2021, April, May, June, July, August, September, I've used it for 6 months. So I need to compute depreciation for 6 months. So I did depreciation for 6 months. That is 17,71,470 into 10% into 6 by 12. That will leave me with 73,811 as depreciation. So if I depreciate with 73,811, then I'll be left with 16,97,659. This is the book value of the asset sold, not the sale value. Then I'll bring you to working note number 2. Book value is 16,97,659. Sale price is 3,75,000. Too much of difference. Ajaga jam tara. Asman Prithvi ka farak. Let's find the difference. 13,22,659. That is found as 16,97,659 minus 3,75,000. That, my friends, is loss on sale of asset. Then the asset which is scrapped, its value as on 1st of April 2019. See, 1st of April 2019. Its cost is 21,85,000. So I'll take on 1st of April 2019, 21,85,000 as its value. I'll depreciate completely for that year, 2,18,500, 10% depreciation. I'll be left with 19 lakh 66,500. Then we are scrapping it on 1st of September. So again I need to provide, oh not 6 months, 5 months depreciation. 5 months depreciation I need to provide. Let me provide 5 months depreciation. So once I provide 5 months depreciation, 81,938, it will come to 18 lakh 84,563. 18 lakh 84,563 is not the selling price, it is the cost book value. I'll write 18 lakh 84,563. This asset is sold for zero. It realized nothing. So entire 18 lakh 84,563 is loss. And one more part is retained. How did we find this part? They have given in the beginning of question that the value of the asset on 1st of April 2020 is 95 lakh. So 18 May total we don't know, 19 May we don't know. 1st of April 2020 total is 95 lakh. Total is 95 lakh. We know whatever the part is sold, its value is 17 lakh 71,470. Whatever is scrapped, its value is 19 lakh 66,500. Can't we find the part retained? Very easy. We'll take 95 lakh. From that, deduct 17 lakh 71,470. Also deduct 19 lakh 66,500. We will be left with 57 lakh 62,030. 57 lakh 62,030. This 57 lakh 62,030 is the value of the part retained. That part of the asset is retained. No? That part retains value is 57,62,30. And this asset is retained till the end of the year. Nothing wrong. So I charge entire year's depreciation and then take the balance to the subsequent year. And they've also mentioned that one more machinery is purchased. Here, on what date? 1st of September 2020, they purchased one more machinery for 14 lakhs and incurred 44,600 on the same day as installation charges. So I'll write 14 lakh 44,600 rupees as my installation charge, total value of the asset. Purchase on 1st of September. So I need to charge depreciation at the end of the year. It is purchased on 1st of September, not 30th of September. So we need to provide 7 months depreciation. So I provide 7 months depreciation, which comes to 84,268, after which the value of the machinery 2 carried forward to subsequent period is 13 lakh 60,332. Got that? So I'll take the total column, and this is what needs to be presented in our ledger account. So I'll write opening balance 95 lakh, purchase 14 lakh 44,600 on the debit, and on the credit depreciation of 1 lakh 55,749 and 6 lakh 66,40, so 471. And I'll write that sale के लिए I'll see working note number 2 only. Whatever the sale price 3 lakh 75, credit side cash received, and losses will be returned to P&L. Chalo, let's see 95 lakh opening. See here, this 95 lakh opening. See, this 95 lakh opening balance will come here, and then we have 14 lakh 44,600 purchase, that will also come on the debit as an addition. And then we have depreciation, total of 1 lakh 55,749, 73,811 on parts sold, 81,938 on parts scrap. So together 155,749. See, I have written 73,811, 81,938 separately. Then after that, this 35 lakh 82,821, I'll come to working note here. Sale price of 3 lakh 75,000, bank account debit. I'll write here bank में 3 lakh 75,000. The next part is, to this extent loss is there, no? 1322,659 and 1884,563. This will go to P&L account debit. So I'll write by P&L. See, by P&L loss 1322,659, 1884,563. Got it? Great. So what do we have after that? Then the asset is sold. That part is taken care of. Then there is depreciation of 6,60,471. 6,60,471 is depreciation on the same. So let us write that as 6,60,471 machinery account credit side, and the closing value is 65,46,159. I found it as balancing figure here in machinery account. You guys can see it here. We add 65,46,159 here. So that basically gives you a feeler that what we've done is completely correct. Got it? So this is the ledger. I'll show it to you for a moment for you to have a look. I'll however be sharing this file with you people. You can ping me and then ask for the file, and I'll definitely share this file with you. Wherein I have not just put solution to June 2022 paper. It also has solution to May 2019, detailedly, November 20, January 21, July 21, December 21, all the papers. And as and when the time permits, when I conduct another further class, I'll put solution to the other question papers also into the same sheet so that it will be easy. You can use simple control F feature to find it. And herein, I have given the working notes more in detail. Now, if you go to ICI material or any other published material, you don't have the working notes so much in detail. They would do 3 4 separate working notes and not this tabular format, and you understand, those of you who learn from you know it. So how detailed the working note is and how will it help you in your day before examination. If you have such detailed working notes in your notebook, the day before the exam you will find it very very comfortable. You don't have to put your head in and then like break your head to understand that working note. That's with regard to question number 2a. I hope you're all clear with this. Can I now go to question number 2b? Chalo guys, let's go to question number 2b now. 2b, this is from chapter 4, valuation of inventory. Z Enterprises furnishes the following information for the year ended 31st of March 2021. Very good. They've given value of stock as on 1st of April 2020. This is nothing but opening stock. What is this? See, they want stock as on 31st of March 2021. They have given stock as on 1st of April 2020. So what is it? This is opening stock. They have given purchases, they have given manufacturing expenses, they have given sales. So all you need to do is something very simple. Apply COGS formula. How do we find it? See, opening stock plus purchases plus direct expenses minus sales minus closing stock will give us GP. Like basically trading account. So if we can crack COGS, sales minus GP, then we can say opening stock plus purchase plus direct expense is equal minus closing stock is equal to COGS. So sales minus GP data given, COGS you find, substitute in the formula, closing stock will be found as balancing figure. We'll do opening stock, we'll take opening stock, add purchases, add direct expenses, and then we'll compare this with COGS. Or we'll find COGS and then we'll find closing stock as balancing figure. Because COGS formula is opening stock plus purchase plus direct expense minus closing stock. We would know COGS, we would know opening stock, we would know purchases, we would know manufacturing expenses. Only thing that we don't know is closing stock. Got that? Very good. Let's start. So opening stock is 28 lakh. So I've written opening stock as 28 lakh. Let me show you. See, opening stock 28 lakh. Then what do we have? We have purchases of 1 crore 38 lakh 40,000. Let me write that purchases 1 crore 38 lakh 40,000. Then we have manufacturing expenses. How much? 28 lakh. Let me write that manufacturing expenses 28 lakh. Then we have cost of goods sold. How do we arrive at it? We will take this sales. We would have to do a working note now. 2 crore 8 lakh 80,000. So let me take you here. Sales working note 2 crore 8 lakh 80,000. Now, at the time of valuing the stock on 31st of March 2020, this is last year. What are they talking about? Last year, a sum of rupees 2,40,000 was written off for a particular item which was originally purchased for 8 lakh. So some item whose original cost is 8 lakh, against it 2,40,000 is written off. So 8 lakh minus 2,40,000 is 5,60,000. So 5,60,000 is the cost of this item in our opening stock. How much? 5,60,000 is the cost of this item in our opening stock. This item was sold during the year for 6,40,000. So the selling price is 6,40,000. So what is the selling price? 6,40,000. So let me write here. Selling price 6,40,000 is abnormal sales. Special item. Yeah. If I write this to be 6,40,000 and we know the cost also. I told you 8 lakh minus 2,40,000, 5,60,000 is its cost. Then, so total sales is 2 crore 8 lakh 80. Abnormal item sold is 6 lakh 40. So what is normal sales? 2 crore 8 lakh 80,000 minus 6 lakh 40,000. That is 2 crore 2 lakh 40,000. Further, they have told except for the debut transaction, that's a special item, the rate of gross profit for the year is 1 by 3 on cost. If it is 1 by 3 on cost, 1 by x on cost. On sale 1 by x plus 1 will be someone, you will be over your x and your x will be with someone. Remember that logic that we had discussed? Same thing. It is 1 by 3 on cost, so on sale it will be 1 by 3 plus 1, it will be 1 by 4. See here, profit is 1 by 3 on cost, so 1 by 4 on sale. So I'll do 2 crore 2 lakh 40,000 into 1 by 4. 2 crore 2 lakh 40,000 into 1 by 4. If I do that, I'll get 50 lakh 60,000. What do I get? 50 lakh 60,000. This is my profit. If I deduct profit of 50 lakh 60,000 from 2 crore 2 lakh 40, we will get cost of goods sold as 1 crore 51 lakh 80,000 for normal sales. For abnormal sales, it is 5 lakh 60. Total cost of goods sold will become 1 crore 57 lakh 40. I will deduct this 1 crore 57 lakh 40 from my usual opening stock plus purchase plus manufacturing expense. Closing stock will be the answer, 37 lakh. A very easy one. The formula is opening stock plus purchase plus manufacturing expense minus closing stock is equal to COGS. So I just swap the place of closing stock and COGS. COGS comes this side, so COGS becomes negative. Closing stock would go that side. So answer is 37 lakh for this question on Z Enterprises. Yeah, I hope you guys understood. I'll leave you with this for a small brief moment so that you guys can have a look. Okay, let me now quickly do 2C and then wrap up this video. The next video will be discussing question number 3 and 4. That's in tomorrow's session. Yeah. Okay. Chalo, let's see. From the following transactions, prepare bank reconciliation statement. Our favorite. Let's do bank reconciliation statement as on 31st of March 2021. Got that? So bank balance as per passbook is given. How much is bank balance as per passbook? That is 25 lakh. Bank balance as per passbook is 25 lakh. So our starting point is passbook. We'd have to find cash book balance. So remember, changes are done in P. So I'll write passbook. In the books of dash, we don't know in whose books are we doing the BRS. Bank reconciliation statement is done as on 31st of March 2021. Bank balance as per passbook is 25 lakh. Then what do we have? Bills discounted, dishonored, not recorded in cash flow. Bills are discounted, bills are received and you discount it with the bank. When you discount it with the bank, bank is supposed to pay you money, balances per cash book will increase. Passbook also will increase. It is dishonored, meaning bank didn't receive money. So banker has reduced your passbook balance, but the entry is not made in cash book. So bill has been discounted, cash book, passbook both increased. Dishonored, passbook has decreased, cash book entry is not made. So the bill which is dishonored has not been entered in passbook, not been entered in cash book. So cash book has not decreased. Where are we making changes? Passbook. So what should I do? Add. Do you want me to say the magic word? Can you see the P? No, you cannot see the P. In order to see the P, either you would have to P up or C down. What's in your control is P. So let's take the P up. So this item has to be added. Shall we add 12 lakh 50? Yeah, see 12 lakh 50,000 is an add item. Got it? Then the next item, check received entered twice in cash book. Someone told double entry, they entered it twice. Double entry means debit and credit aspect has to be recorded. Same thing should not be recorded two times. Okay, so check has been received. Balance as per cash book increased. Passbook increased once, but cash book we made one more entry. Chanagide, take one more entry. So if it is a check of 25,000 received, passbook increased by 25, cash book increased by 25, 25, 50. Passbook increased by 25, cash book increased by 50. So there is a difference. Can you see the P? No. In order to see the P, either you have to P up or you have to C down. What's in your control? Sorry, P is in your control. So what do? We add back. Yeah, we add this 25,000. 25,000 added. Got this? Next item, bank charges entered twice in cash book. Whenever bank charges money, it will reduce our passbook balance. It is reduced to your cash book balance also, but they have written it twice. Passbook may reduced 5,000, cash book may 515. You are following double entry, not double entry, double entry. So is there a difference? Yes, there is difference. Can you see the P? No, you cannot see the P. In order to see the P, either you would have to P down or you would have to C up. What's in your control? P. So what will we do? We'll P down. We'll P down. So reduce it by 5,000. Shall I reduce it by 5,000? Of course. Oh, sorry. Cash book has reduced. We're making changes in passbook. We're making changes in passbook. Oh, it is less. Ouchie. Ouchie, ouchie. I've typed wrong here. Sorry. Passbook, cash book में they've entered twice. Passbook में only once. Passbook में minus. Done. Next, insurance premium paid directly by bank under standing instruction 1,50,000. So banker has straight away paid the insurance premium, because of which passbook balance has reduced, cash book balance has not reduced. We are making changes in passbook. You cannot see the P, so we will add. So this 1,50,000 is an added. Sorry, 1,50,000 is an added. Got that? Next, check issued. You have given check to somebody, but they have not presented to bank for payment. So when you gave that check to somebody, your balance as per cash book increased. When they present, passbook will decrease, because they have not presented, passbook balance has not decreased. The person to whom you gave the check has not presented it, so the balance as per passbook has not reduced. Where are we making changes? Passbook. So what should we do? We have to reduce our balance as per passbook. Shall we? Yes, it's minus. How much minus? Check issued but not presented for payment. 12,50,000 minus. 12,50,000 minus. Got that? Then what do we have? Check received but not sent to bank. 28 lakh. We have received the check, because of which balance as per cash book has increased. We have received the check, because of which balance as per cash book has increased. But this check is not presented to bank. Because this check is not presented to bank, balance as per passbook has not increased. Let me repeat. You have received the check, because of which balance as per cash book has increased, but this check is not presented to bank, because of which balance as per passbook has not increased. So balance as per passbook has not increased, balance as per cash book has increased. Where are we making changes? Making changes in passbook. I need to add this 28 lakh. Let me add 28 lakh. Cool. Next item, checks deposited in bank but no entry passed in cash book. Oh, this time you deposited the checks into bank. Your balance as per passbook also increased, but balance as per cash book has not increased. Balance as per passbook has increased, but balance as per cash book has not increased. Where are we making changes? We are making changes in passbook. So what do I do with my passbook balance? Reduce it. Balance as per passbook has to be reduced. So shall I reduce passbook balance by 12,50,000? Yes, I will. Passbook balance reduced by 12,50,000. Great. Then the last one that I have, credit side of bank column cast short 5,000. Bank column credit side has been cast short. Credit side basically talks about payments. So payments has been decreased. When you decrease the payment, the closing balance will shoot up. When you decrease the payment, closing balance will shoot up. Where? Cash book mein bank balance has gone up. Passbook mein it is not. Where are we making changes? Passbook. So what do? I'll add this 5,000. So I will add 5,000. This is the last one. And by summation, we will end up with balance as per cash book as 42,25,000. So this is the answer. I hope you all understood. Got that? I hope it's clear also with you all. Great guys, that's the end of question number 2. I'll not pull the video really long. So let's call it a day at this point of time. So tomorrow we'll meet again, same time. And when we meet tomorrow, we'll be discussing question number 3 and 4. So hoping to see you all seeing this video, solution to question number 3 and 4. A very interesting question is there. And it's little more than 20 marks because there's one extra question. Yep, that's it guys. So as I told you, if you want me to do any specific topic, you can please drop it in the comments to this video. If the marathon revision had helped you, or if this solution video is helping you, we can drop it again in the comments and then tell that it helps. It feels really good to read that comment, and then that actually makes our day. So that's it, guys. Remember, life is not a battle to be struggling, it's a game to be enjoyed. Till the time you're learning something, you're having fun, it's all good. The day you guys either stop learning something new or stop having fun, trust me, you might start struggling because you might be in a battle. So thumb rule to stay happy is pretty simple. It is to stay in the game. So for one last time on this day, I have just one simple question to all of you. Are we in the game? I hope the answer is yes, we are in the game. See you all in the next video, part 2 for detailed solution to CA Foundation Principles and Practice of Accounting, June 2022 paper. Till then, tata, bye bye, take care and get lost.